European Central Bank Executive Board member Isabel Schnabel has issued a stark warning about the inflationary consequences of the ongoing conflict in Iran. Speaking at a monetary policy conference on June 1, Schnabel stated that the ECB can no longer ignore the inflationary effects of the war. This marks a shift in the ECB's stance, which had previously treated energy price shocks as temporary disruptions. Now, the bank is acknowledging that the conflict has introduced a broader and more persistent inflationary dynamic. The war in Iran is no longer just affecting energy markets, it is now influencing price pressures across multiple sectors. Schnabel emphasized that disruptions to energy infrastructure and global supply chains have fundamentally altered the inflation landscape. Even if the conflict were to end immediately, the structural damage to production networks could require a prolonged policy response. This is a significant point because it suggests the ECB is preparing for a longer-term adjustment in its inflation strategy. The ECB's traditional approach to energy price shocks has been to treat them as temporary and manageable within a broader framework of price stability. However, Schnabel warned that the current situation is different. The war. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Is not just a supply-side shock, but is increasingly resembling a global demand shock that raises production costs across multiple sectors. This distinction is important because it changes how the ECB will interpret inflation data and adjust its monetary policy. When asked about the number of future interest rate hikes, Schnabel remained cautious, stating it is too early to say whether the ECB's tightening cycle will conclude with just a few increases. This uncertainty has added to market speculation about the pace and duration of monetary tightening in the eurozone. The implications of this shift are significant. For both consumers and investors, higher borrowing costs could lead to increased mortgage rates, higher business investment costs, and tighter credit conditions across the 20-nation currency bloc. If inflation expectations become de-anchored from the ECB's target, the central bank may be forced to take more aggressive measures to restore price stability. The ECB's evolving stance also raises questions about how it will balance its inflation objectives with broader economic stability. The bank has historically prioritized price stability, but the war in Iran is forcing it to consider the broader economic and geopolitical context. Schnabel's comments suggest the ECB is preparing for a prolonged period of uncertainty and may need to adapt its policy framework to address the new inflationary reality. The next signal to watch will be the ECB's upcoming inflation forecasts and how it incorporates the conflict's impact into its policy decisions. If inflation expectations rise further, the ECB may face pressure to raise rates more aggressively, even if it risks slowing economic growth. The mechanism behind this is that persistent inflation expectations can lead to wage and price spirals, where businesses and workers anticipate higher costs and factor them into contracts, and most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Pricing decisions. This feedback loop can make inflation self-fulfilling, making it harder for central banks to bring prices back under control. The stakes are high because if the ECB miscalculates the inflation trajectory, it could either under- or overreact, leading to either a resurgence of inflation or a slowdown in economic activity. The next signal will be the ECB's next monetary policy meeting, where officials will assess the latest inflation data and adjust their forecasts accordingly. Until then, markets will remain on edge, waiting for clarity on how the ECB plans to navigate this new inflationary environment.